Hello and welcome back to the COVID-19 Economic and Market Impact Series for our June 20th weekly update. I'm Cansu Freeman, Research Assistant for the Center for Regional Analysis. This video series is part of the Northern Virginia Association of Realtors George Mason University Market Forecast Project. Yesterday was Juneteenth, which celebrates a day in 1865 when Union soldiers arrived in Galveston, Texas to announce that the Civil War and slavery had ended in the United States. This happened to be 2.5 years after the signing of the Emancipation Proclamation. Juneteenth has become a recognized day of celebration and reflection on race relations in the United States. We pray that we can move to a path of sustained healing and equal opportunity for all Americans. This week's report on new claims for unemployment insurance is disappointing. The total number of new jobs barely dropped compared to the previous week, staying above 1.5 million claims for the week ending June 13th. The U.S. economy, though creating net new jobs, continues to shed jobs at an unprecedented rate. This news is exacerbated by the indications that the states that opened the earliest are now seeing record numbers of new COVID-19 cases. This suggests that the fears of a second wave may come to pass. Reflecting national trends, the level of new claims for unemployment benefits in Virginia have also leveled out, but at a distressingly high level. The hope we had for a quick end to the pandemic's economic effects are out the window. Adding to our litany of not-so-great news, continuing claims for unemployment benefits has flattened at a very high level. More than 20.5 million American workers have been on the unemployment rolls for 2 or more weeks as of the week ending June 6th. In total, since March 7th, over 46 million U.S. residents have suffered job loss or temporary furloughs. The National Bureau of Economic Research has declared that the U.S. economy entered a recession in February of this year. First quarter GDP, which only includes a couple weeks of the COVID-19 related economic shutdowns, dropped an estimated 5.4% from the fourth quarter of 2019 at seasonally adjusted annualized rates. The second quarter numbers will be very ugly. In the chart above, which comes from the Atlanta Federal Reserve Bank, you can see how uncertain forecasters are about the depth of our economic downturn and how the outlook has become increasingly pessimistic over the past 2 months. At CRA, we have never seen a period where the spread in the blue chip forecast estimates have been this wide. At the beginning of this month, the Atlanta Fed was projecting second quarter GDP to fall by more than 50% at annualized rates, but more recently has trimmed back their projections to about a 45% drop. To put this into perspective, if the Atlanta Fed is correct in their most recent GDP estimates for the second quarter of 2020, the quarterly drop will be 5 times the magnitude of the worst quarterly drop in GDP during the Great Recession. Several economists have predicted that our current recession actually ended in mid-May and that the national economy is growing again. But it will take a while to bounce back from the economic devastation of the coronavirus. As wide as these projections are for second quarter GDP, it's no surprise that there is little consensus among economists and market watchers on when the U.S. will regain the level of economic activity it had in early 2020. Most reasonable estimates say this recovery cannot happen before 2022. With all the doom and gloom of the national economy, we're happy to report that the Northern Virginia housing market continues to pick up speed, with weekly new residential listings rising back to levels that are close to pre-pandemic levels. The trend in new pending residential sales is also encouraging, though extremely tight inventories remain a drag on total local real estate market activity. Thank you once again for tuning in to our weekly NVAR area market update. In the coming weeks, we're working with our NVAR partners to develop a market forecast for the remainder of 2020. Stay on the lookout for this and other reports and information at the website shown above. On behalf of the entire CRA team, we wish you good health and good luck. So long for now.